Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 4 of December 2024. The Reserve Bank of India has turned down banks' plea for more time to brand a dodgy borrower as willful defaulter. A client who diverts borrowed funds or refuses to repay loans despite having the ability to do so. Banks now have 6 months to complete the process. This decision aims to prevent asset value decline. The process involves internal committees and hearings with borrowers. Borrowers deliberately delaying proceedings prompted the RBI's action. This move protects lenders and maintains financial stability. Earlier, SEBI issued directions to stock exchanges with a commodity derivative segment to suspend trading in derivative contracts for 7 agro-commodities for a period of 1 year. Subsequently, the suspension was extended beyond December 20th, 2023 to December 20th, 2024. Now, SEBI has further extended the suspension of trading in these contracts to January 31st, 2025. On November 29, 2024, certain taxpayers received defective return notices alleging discrepancies such as offering income under Section 44AD despite gross receipts exceeding Rs 2 crore, absence of audited books of accounts, or failure to file a balance sheet and profit and loss account. Upon review, the department confirmed these notices were issued in error. The department has assured taxpayers that such erroneous communications should be disregarded. The Goods and Services Tax Council has paved the way for several amendments to the CGST Act, including a retrospective change to reverse the Supreme Court's judgment in the Safari Retreats case during the budget session. Other proposed amendments include provisions empowering the government to enforce a track and trace mechanism for specified evasion-prone commodities. Despite the demand from some partners for inclusion of investment protection treaties in the free trade agreements that are under negotiation, India would stick to its stand of signing separate treaties for investments and not making them part of free trade agreements. India is currently negotiating trade agreements with the UK, European Union, Australia, Peru, Sri Lanka, and Oman. In the ongoing talks with the EU and UK, the bilateral investment treaties is being negotiated separately. Over 15% of India's high net worth individuals are under 30, driven by startup unicorns, IPOs, and tech-driven ventures. This number is expected to rise to 25% by 2030. Nearly 30% of new high net worth individuals owe their fortunes to technology, fintech, and startups. The Make in India push has fueled industrial wealth, contributing 21% to the ultra high net worth individuals' economy, as per a report from Anarock. Honda and Nissan are in talks to merge by 2026, a historic pivot for Japan's auto industry that underlines the threat Chinese EV makers now pose to the world's long dominant legacy car makers. The tie-up would create the world's third largest auto group by vehicle sales after Toyota and Volkswagen. It would also give the two companies scale and a chance to share resources in the face of intense competition from Tesla and more nimble Chinese rivals such as BYD. Luxury brands like Gucci and Louis Vuitton are witnessing increased sales in India's non-metro cities due to e-commerce and travel retail expansion. High-end consumption patterns are emerging in Tier 2 and 3 locations like Ajmer, Surat, and Kochi, demonstrating rising affluence and spending capacity among consumers. With a young demographic and an expanding middle class, India's Tier 2 cities and beyond are displaying a greater propensity to spend. Hisense Group, China's largest television manufacturer and amongst its largest appliance makers, is planning to acquire a stake of up to 26% in Indian contract manufacturer ICAI Durables' wholly owned subsidiary. ICAI is building a large manufacturing facility in Sri City, Andhra Pradesh, to produce air conditioners, refrigerators, washing machines, and small domestic appliances under the Hisense brand. The factory will be set up by the newly created subsidiary ICAI Manufacturing Technologies, where Hisense will acquire the stake. Adani Defence Systems and Technologies, or ADSTL, has signed an agreement to acquire 85.8% stake in Airworks, India's largest private sector aircraft maintenance, repair and overhaul company, at a valuation of Rs 400 crore. Airworks undertakes base maintenance for narrow-body and turboprop aircraft as well as rotary aircraft from its facilities at Hosur, Mumbai and Kochi. Airworks has received regulatory approvals from civil aviation authorities of more than 20 countries. With a workforce of more than 1,300 personnel, Airworks handles MRO works of commercial as well as defense aircrafts. Indian carriers have ordered about 1,500 commercial aircraft in the last 2 years. This would need a massive expansion of existing MRO facilities in the country. The GST Council's decision to retrospectively amend the Central Goods and Services Tax Act to restrict input tax credit on construction services for commercial real estate such as malls, shops, etc. for leasing could push project costs and increase rents. In a case involving one safari retreats, the Supreme Court earlier allowed input tax credit claims on construction costs for rental properties. However, at the 55th meeting at Jaisalmer, the Council decided to retrospectively amend the Act, reversing the ruling that allowed input tax credit. Those who have historically been availing input tax credit may now be more apprehensive about being challenged by the GST authorities and may choose to pass it on to their tenants. Travel tech company Oyo said it has completed the acquisition of US-based G6 Hospitality from Blackstone for $525 million. The all-cash deal was initially announced in September. G6 Hospitality is an economy lodging franchisor and the parent company of Motel 6 and Studio 6 brands. With this acquisition, Oyo will get around 1,500 franchised hotels across the USA and Canada. Family offices of prominent industrialists, private equity funds, are considering acquiring a majority stake in the Indian operations of Haier for a little over $1 billion as the Chinese consumer appliances and electronics major seeks to indigenize its business amid heightened regulatory and bureaucratic scrutiny. Warburg Pincus is working with Sunil Mittal of Bharti Enterprises, while Bain Capital has teamed up with the family office of industrialist Puneet Dalmia of Dalmia Bharat Group to pick up a minimum 51% controlling interest in Haier Appliances India. TPG Capital, Goldman Sachs, GIC of Singapore and Welspun Group promoter BK Goenka too are in fray. As per the SEBI's Master Circular dated June 27, 2024, AMCs are required to submit a soft copy of the draft scheme information document to SEBI, which is made available on its website for 21 working days from the date of filing to receive public comments. SEBI has now reduced the timeline for uploading these documents on its website from 21 working days to at least 8 working days to receive public comments on the adequacy of disclosures made in the offer document. In order to facilitate ease of doing business and to bring about standardization in implementation, the Industry Standards Form or ISF has formulated industry standards for effective implementation of the requirement to disclose business responsibility and sustainability report or BRSR core under LODR norms. The listed entities must follow the standards to ensure compliance with SEBI requirements on disclosure of BRSR core. The circular shall be applicable for financial year 2024-25 and onwards. The National Financial Reporting Authority or NFRA issued 2023 inspection reports for BSR & Co. LLP and Lodha & Co. LLP, highlighting deficiencies in audit quality and compliance systems. For BSR & Co., improvements in governance and documentation were noted, but gaps in verifying related party transactions and compliance with the Companies Act 2013 were identified. Lodha & Co.'s inspection acknowledged progress in some areas but revealed issues with audit documentation, independence declarations, and engagement quality control reviews. NFRA emphasized the need for both firms to address these shortcomings, adopt better technology, and enhance quality control to ensure compliance with auditing standards. Selectric Semiconductor Manufacturing, a venture backed by Chennai-based Zoho Corp, will invest Rs 3,425 crore to set up a manufacturing unit in Karnataka's electronics manufacturing cluster at Kochanahalli, Mysuru. The project is expected to create 460 jobs. Selectric's project is reported to be the first to launch in the Kochanahalli electronics manufacturing cluster, where the state has allocated 234 acres to focus on electronics and semiconductor production. Launched in March 2024, Selectric Semiconductor Manufacturing will focus on producing semiconductors for power electronics with applications in electric vehicles, automotive components, and renewable energy. Chinese electronics and automobile companies in India are tapping into cash reserves or taking loans for expansion plans amid a prolonged delay in securing government approval for their parents' equity funding proposals. Some, like Hair and Media Group, are using a mix of cash reserves and loans, including external commercial borrowings, while financials of Lenovo and Xiaomi showed an increase in their cash reserves and borrowings, indicating preparations for higher working capital needs for expanding operations. Chinese automaker SAIC, which owns the MG Motor brand, had used the ECB route prior to its joint venture with Sajjan Jindal-led JSW Group earlier this year. Funding for India's electric vehicle sector has nearly halved between 2022 and 2024 as policy changes and a decline in sales growth prompted investors to push for better unit economics and profitability at companies before committing further capital. Funding in the overall EV industry dropped to $586 million in 2024 from $808 million last year. EV startups had racked up $934 million in 2022 on the back of investor bullishness fueled by government incentives for the sector. The PM E-Drive scheme, implemented in October, aims to gradually reduce the industry's reliance on subsidies, replacing the FAME 2 program. Under the new scheme, subsidies for electric two-wheelers are based on battery power with a fixed rate of Rs 5,000 per kilowatt hour in the first year, capped at Rs 10,000. Although the introduction of SATCOM services is in wait-and-watch mode and the numbers are yet unclear, the sector could create the need for highly skilled talent in space technologies to manage operations from India once players such as Elon Musk's Starlink, Amazon's Kuiper, Bharti-backed Etisalat OneWeb, and the Reliance Jio SES JV foray into the SATCOM's race. Those candidates who had secured exemption in the May 2023 exam, which was valid till the September 2024 CA exam, will get the option to continue their exemption on exhaustion of the said exemption after the declaration of the September 2024 result. Exemption in any papers that has become exhausted upon declaration of the result of the immediately succeeding third exam will be shown to the candidates as per dates given in the ICAI portal. The candidates desirous of making the exhausted exemption permanent will have to apply for the same through the dashboard of self-service portal. Candidates will get only one chance to make the exemption permanent. If a candidate has an exemption in two papers of the same group, for example, papers 1 and 2 of group 1 that are offered in this window, then he or she has to apply either for making both exemptions permanent or let both exemptions lapse. He or she cannot opt to continue exemption in one paper and let it lapse in the other paper. In anticipation of the US going ahead with higher tariffs on Chinese imports, the Federation of Indian Export Organizations has formulated a strategy to raise its share in the US market. As part of the strategy, the apex body of export promotion councils has identified 5 sectors where emerging opportunities can be captured within a short span of time. The 5 sectors where India can move in quickly are apparel, leather, toys, electronics, and organic chemicals. In electronics, the fastest growing export to the US, the strategy involves moving beyond smartphones. The difference between Chinese and Indian exports of these items to the US is huge. Also, a lot of apparel firms are shifting bases to India from Bangladesh due to political uncertainties there. India is considering cutting income tax for individuals, making up to 1.5 million rupees a year in February's budget to provide relief to the middle class and boost consumption as the economy slows. The move could benefit tens of millions of taxpayers, especially city dwellers burdened by high living costs if they opt for a 2020 tax system that strips exemptions like housing rentals. India gets a bulk of its income tax from persons earning at least 10 million rupees, the rate for which is 30%. India is well on its way to become the world's third largest economy in the next 5 years, the World Economic Forum said in a report earlier this year. This growth, while driven by traditionally thriving sectors that include manufacturing, information technology and banking, is now being boosted by emerging sectors that are projected to grow further in 2025. 2 such sectors that have emerged with prominent potential this year are global capability centers and data centers. Indian banks' financial health has remained strong with expansions in loans and deposits. Gross bad loan ratios decreased to over 13-year lows and net bad loans also declined. Banks have improved their balance sheets and profitability. The Reserve Bank of India emphasized strengthening risk management and IT governance. Non-bank lenders need prudent growth approaches and robust risk management frameworks. India's Finance Ministry is optimistic about the country's economic growth, projecting a 6.5% growth in financial year 25. Rural demand continues to be strong with significant increases in vehicle and tractor sales in late 2024. Urban demand is also improving, evidenced by rising passenger vehicle sales and domestic air traffic. ICAI plans to set up 11 centers of excellence in 3 years, focusing on AI and IFSC to boost financial literacy and globalize India's accounting sector. 2 centers of excellence are operational, with a third launching in Kolkata by January 2025. ICAI will also host the World Forum of Accountants in January 2025. NFRA has penalized and debarred auditors for major lapses in the audit of DB Realty Limited for financial year 2015-16, including misreporting guarantees, negligence in loan reviews, inadequate investment audits, misleading financial reports, and violations of auditing and legal standards. The order underscores gross negligence, insufficient professional skepticism, and substantial risks to stakeholders. NFRA has also issued a significant order addressing audit lapses in the statutory audits of Zee Entertainment's financial statements for financial year 2018-19 and 2019-20. The order highlighted negligence, including the auditor's failure to report unauthorized use of company funds, lack of professional skepticism, and deficiencies in audit evidence. Consequently, the audit firm was fined ₹2 crore and individual partners received penalties and debarment. ICAI plans to finalize international networking guidelines for CA firms by fiscal year end, alongside reforms like simplified merger norms, relaxed advertising rules, and extended demerger timelines. These changes aim to position India as a global accounting hub while ongoing discussions address NFRA's proposed auditing standards. As many as 6 cars priced over ₹50 lakh were sold every hour in India this calendar year, up from only 2 5 years back, indicating a sharp rebound in demand at the upper end of the market and expanding affluent class. Sales are expected to accelerate further, with luxury car makers preparing to roll out more than 24 new vehicles in 2025. Luxury cars currently have a little over 1% market share in India, the lowest among major economies. The country, however, offers ample growth potential given it is home to one of the highest number of billionaires worldwide. The battle for AI talent is set to escalate in the coming year as technology multinationals, global capability centers, and IT companies race to hire the best workers in a constrained labor market, inflating wages. Salaries of AI specialists have been outpacing their peers in traditional IT roles by 35 to 70%. AI talent demand is expected to reach 1.3 million by 2027, a twofold rise from the existing pool of 600,000 to 650,000, even as the AI market itself is forecast to expand at a rate of 25 to 35%, exacerbating the gap. The Institute of Chartered Accountants of India has released the admit cards for the January 2025 Foundation and Intermediate exams. The GST Council's recent proposal to increase the goods and services tax rate on used vehicles from 12% to 18% has sparked concerns about its potential impact on India's formal used car market. The revised rate applicable to vehicles sold through registered dealers and online marketplaces is expected to shift a significant portion of used car transactions to informal channels, undermining the growth of the organized sector. The Securities and Exchange Board of India issued clarifications on the transfer of shareholding among immediate relatives and the transmission of shareholding of investment advisors, research analysts, and KYC registration agencies. Transfer of shareholding by way of transmission to an immediate relative will not result in a change in control. The market regulator also detailed exemptions where transmission of shareholding in a registered entity will not be considered a change of control, such as passing on partnership right to legal heirs in case of death of a partner, or interstate transfer among the partners where the partnership has more than two partners. However, the induction of a new partner will be considered a change of control. SEBI mandates certain prior approvals for change in control and prescribes the fit and proper criteria for such entities. Surgeon Jindal powered JSW Energy announced it has signed an agreement to acquire O2 Power's green energy platform in a 1.47 billion enterprise value deal. This is JSW Energy's biggest acquisition ever. JSW Energy said its wholly owned subsidiary JSW Neo Energy will acquire the platform jointly established by EQT Infrastructure and Temasek. The transaction values the platform at around Rs 12,468 crore after adjusting for net current assets. Around 2.25 gigawatts of capacity is set to be operational by June 2025. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.